The question is, will tomorrow's jobs report give the green light for this rally to continue or not? Mark Luschini has some answers. He's chief investment strategist at Janney Montgomery Scott. Mark, what do you think? What you just heard from ZipRecruiter? What's your spidey sense telling you?
Well, I would have to say, given the fact that we've seen some slowing in all the data the aforementioned guest had talked about, and of course we've noted the same, that would be surprising to see a particularly strong jobs report. In fact, that might unnerve investors who have kind of bid on the fact that bad news is good because it more likely than not feeds the narrative that has obviously undertaken the rally in equity prices that the continues to put the Fed on hold, if not even bring forward the prospects of rate cuts coming sometime in early 2024. So, I think we've seen some diminution in the pace of job creation. I still think it'll be positive nonetheless. The shock on the other side would be a negative report, which would be equally unnerving and perhaps pull forward the thoughts that perhaps the risk of a recession is near and present. But I expect the number is probably going to be around consensus, 180,000 or so, plus or minus, and that should be sufficient to keep the inertia behind the economy and at the same time not be so strong as to worry investors that the Federal Reserve is going to have to stay higher for longer or, in fact, re-option, if you will, a rate hike in one of their forthcoming meetings.
A lot of talk about the rotation from the Magnificent Seven to elsewhere, even if today's a bit of a counter-trend move in that regard. What would you say about that? It set us up nicely for 2024. Does it become a headwind for market gains?
I don't think it's a headwind. Obviously, if we see this rotation, is going to have an influence on the capitalization weighted S&P 500 because those Magnificent Seven represent almost 30% of the index. But that doesn't mean that other sectors cannot perform. And so when we look at the broadening of the participation, particularly among industrials, financials, to name a couple that are more sizable in terms of the percentage weighting in the S&P 500, there's a lot of opportunity there to sort of nest around and find, stocks or at a sector level participate more broadly in what might be some leadership coming out of the equal weighted S&P 500. Still, however, much is going to depend on the evolution of the economy, and the key there is the job market. So yes, it is encouraging. It's also encouraging to see small caps participating. Of course, TISTA season here as we embark on the prospects of a Santa Claus rally and the January effect that's now been pulled forward into December. But nonetheless, if it continues after the first of the year, then I think we need to obviously respect its move, and the possible aversion or recession means it could continue.